So we have the strip mall guy on, Don Tepman, and thank you so much for coming on. You're making like a huge media tour. I feel like you're everywhere right now.
Well, it's the annual gala is coming up, so got to go. Talk about it, and it'll be exciting, and folks want to know what it's all about, and so I'm out there.
Well, we're here to hype it up because we know that this is the third year, I think, right?
Third annual gala, yeah.
It's the third year of the annual gala, and it is kind of like, one of the real estate events. Let's call it one of the events of the century. Let's just blow it out. And,
it's
what are you going to say next year? As the fourth.
Yeah. It's wild how it all happened because it really happened by accident.
Yeah.
It was just me a couple of years ago wanted to just meet some people that were online that were sharing every day, et cetera. Just meet in person and see what happens. And then people showed up. It was a Soho house 2 years ago, and everyone had a great time. They're like, let's do it again. So we did Peak last year at Hudson Yards. We did black tie, tuxedos, red carpet, media. Jeff Blau came out, a bunch of folks from the industry. I think like half the room flies in from out of town, which creates like a good level of excitement. And so,
and there's always a good excuse, I guess, to be in New York. Too, right?
Yeah. And people do other things, et cetera. So so this year it'll be I think almost 300 people, a bunch more media, more red carpet, bigger names every year. So it keeps getting bigger, and it's we'll see what happens next year. So.
Well, let's get into it, but let's table it and let's talk just for a little bit about you. And I think you're probably used to this by now, just talking about how Strip Mall Guy came to be, and a little bit more about your backstory in real estate and how you got to where you are. So you might just kind of...
Hey, you're the real estate version of liquidity.
Once
you finally...
Love that guy.
For those that don't know, some people might be watching this or listening to this and they don't know Strip Mall Guy. And it's for the two people that don't know.
It's more than two people.
It's I don't know about that. It's one of the most followed commercial real estate Twitter accounts.
Yeah. And LinkedIn.
You're really growing now as well.
I always saw you on LinkedIn, and I think that's where I got the posts.
And it's always been a cartoon. So you never really see your face on the account. It's a cartoon. So not that long ago, you actually came out and showed your real face, and people actually got to know the real name behind Strip Mall Guy.
Yeah, were most people happy? They're like, oh, it's this guy.
I think it was a big who is it? Oh, it's really a dude that buys strip malls and been doing it for 20 years.
It's
and,
in the name.
So because you get people that are skeptical when you're anonymous.
Of course.
Is it BS, whatever it was.
Well, give us the backstory. Tell us how you got into the business and how it got started.
Well, before the business, what prompted Strip Mall Guy? Curious.
Literally, I was in an airplane killing time and had an hour to go. And, I always wanted to post what I think is like the real estate information, not just the stuff that you hear about, which is, like take on a lot of debt. Debt is bling, passive income. It's easy. Just get in, it only goes up. So all these things are just like dead wrong. I wanted to share what I tell my LPs, what I would tell my family, friends, et cetera, about, how it kind of really is. And so I was afraid of posting under Don, right? Because it's like, what if my investor reads this, or my tenant, or my employee? I just, I would draft tweets as me and just like never actually send them.
Okay, well, can we talk about that? I wanted to get into kind of how you guys started, but I think this is a good time to talk about it. Social media in general, people get scared to post on social media as themselves because you're putting yourself out there. And
don't you?
I'm so uncomfortable about it.
There's certain things. I can't even just say like some factual things about deals because it feels like the tone. People, there's no phone, there's no in-person connection. You don't understand somebody's tone. You don't know where it's coming from.
And also, what's the upside of posting is what people wonder. Like, why am I really doing this? It's really only downside, et cetera.
Well, and this is something that we try to talk about with Bob Knackle when he came on too. Is hey, like putting yourself out there, it's not comfortable. And you're always, I think a lot of us are scared about some pushback or criticism or what bad can come from it. But I think generally speaking, more good will come from it than bad.
Which I wouldn't have thought. So, I didn't want to rock the boat on my career or so, I basically started posting, anonymously that day on that plane. Just thinking, okay, well, who cares? I'll just kind of vent And then in like 2 days, I'll just close the account and kind of get it out of my system.
Yeah.
Do you remember what your first post was?
Man, yeah. So I mean, it was something boring, probably about like parking ratios or
yes, parking ratios,
or
drives me nuts.
or dry cleaners and so it's very kind of inside baseball, like geeking out on real estate. And it just started growing really, really quickly. Like that first day, I think I got like 300 followers, and then like a week later it was 1,000. And
wow!
I thought that the algo was broken. I was like, why is this growing? Like, what's actually happening here? So it scared me a little bit, and I was very serious about not sharing that it's me. And then a bunch of folks in real estate who have funds, et cetera, like Keith Wasserman, et cetera, Moses Kagan, they started retweeting me and so the audience really grew. And I think that like folks out there who are in commercial real estate appreciated, hearing from someone who really has been doing this for 20x years. And that's very just open about sharing everything. All my secrets are out there.
You seem to be really open and there's kind of a gloves off, like you just come out with it. And I think people will appreciate that. But I mean, you obviously had some comfort in putting yourself out there, but you weren't putting yourself out there because your name wasn't attached to it. So,
I mean, my best friends didn't know. I mean, I was strange about it, like the first 6 months. And then, DMs started coming in from real people. And then, I go on LinkedIn, see who they were, like take the call, block my number, and just like talk to them. And it was executives at like large companies, bankers. And so I realized, I was actually connecting with real people, and in real estate, networking is the backbone of everything. And so my network started growing, but they didn't know who I was. So what benefit is that, right? So I would pick and choose who I would tell, who I was to, and then it's funny. Like there's a guy named Sam Parr who was in town like after 6 months after I launched the account. He reached out, hey, I'm Trent. I want to meet you. And so we went on a walk, and he didn't want to know my name. He was cool about the whole. He's like, don't worry about it. And so, like, we go on a walk, and I see this guy that I know from real life. He goes, Don, hey, what's up? And I'm like, and he's looking at me like, Don, Trent. And it was just a very odd, situation. And I'm thinking, look, I mean, at some point, I got to figure out how to make this kind of normal. And then what happened was, which changed the whole game for me, is Kyle Matthews basically gave me an intervention about 2 years ago.
What did he say?
So I was doing his podcast in Nashville, and we had breakfast. In the morning, he's like, Don, like cut this anonymous stuff already. And I'm like, well, what do you mean? Why? I'm never going to do that. I'm an introvert. I'm private. He goes, every week somebody calls me and says that they have a deal for you and don't know how to get a hold of you. So how many leads are you missing? I'm like, I don't care. It doesn't matter. I'm never going to do it, Kyle, whatever. And so, but.
So we owe Kyle. Kyle's the guy.
I do.
By the way, can you scoot in just a little bit? It's going to bother me. I don't want to make sure the audience
gets
picked up.
I don't want you bothered.
OCD.
Yeah. And it's cool because you guys can talk.
Marcel, we can hear everything, right? All right, good.
Yeah. So when I left, I kind of left that night, and I was thinking about the biggest fear for me in real estate is finding that next deal, right? Like, I can't answer the question of how many deals will I do next year. It's always been really hard. Like once we buy a deal, it's a train track. You do this, that, just execute on the plan, same way I've done for 20 whatever years. And so, if we don't have deal flow, I go out of business.
Right.
And so I realized that I got to think about what sacrifices that I need to make in order to, increase my deal flow, if indeed that's what's going to come out of it.
Sure.
And so I spent, a few weeks, I talked to my wife, a few investors, friends, and said, you know what, let's do it. And it changed our business almost overnight, like the moment that I went anonymous. I mean, last year we did I think 36 million in purchases, and maybe over 30 million was somehow related to the Sirmal Guy brand.
Really?
Wow.
It's unbelievable.
So almost instantaneously you had more people reaching out to you with deals.
Yeah, because now brokers who know our company, like in California, in the Bay Area, brokers know Town Center Capital, but beyond that, it's not really. And so, how do you become top of mind nationwide? It's something I never thought that I could fix. And so now, brokers reach out because they know how to find us.
Yeah.
Before, I would get DMs of deals in the beginning. I'd be like, well, this is a good deal, but what do I do with it? I can't tell this person who I am. So why am I? And so that changed. It was really overnight, and then Real Deal did a great piece, and that was just kind of like changed everything.
I remember seeing that. Yeah, it seems like there are a lot of ways to get in front of people and have your name be known, but social media and the way in which you've attacked it, especially, is probably the most efficient way. Where else are you going to get in front of thousands of people, right?
Exactly. I mean, now, everyone's emailing brokers, et cetera, but it's like, if a broker's following you and you're giving them good content and you're like, like basically relaying what you see every day, that's valuable for them, and they'll follow you, check in, and it makes them think of you when they come across a deal, et cetera. And same with sellers. We're buying deals now from large institutions, Torino, which is a $5 billion public REIT, sold us a deal in November because we're giving them surety of close because in this space, it's so fragmented. There's like, I think 95% are owned by just kind of random local people. A big company needs surety of close. And so, we are a brand that gives them that.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Greysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at greysteel.com. So it sounds like you're going after both principals directly and
not
brokers.
For deal flow, no.
Okay, you're going so like mostly just from
there's
brokers.
Always brokers involved, but those principals knowing who we are and our brand helps the broker's cause.
Got it.
But we're very, very broker friendly. I was a broker myself. I know what brokers need in order to transact with you, and we really work hard to engage with the brokers. I mean, that's our lifeline.
Tell us about the transition from being a broker to being an owner operator.
Well, in general, where'd you get started?
Yeah.
Did you start as a broker?
I did.
That's your first job?
Yeah, I started right out of college. I knew zero about real estate. Family's not in real estate. I literally knew nothing about strip malls or anything.
Okay, you go to college where?
Santa Clara.
Okay. What pulled you?
Silicon Valley.
What pulled you into this?
Yeah, so during college, like everyone else in our dorm room, in 99, I had a startup. It was just like the thing you did in Silicon Valley back then. Amazon would double every day seemingly, and everyone was buying stocks, day trading, and so I thought I'd be in tech. And then that crashed, and in 2002, kind of coming out of that, I needed a job. Tried to get a job at Goldman, made it to late interviews, didn't get the job ultimately, and so my old baseball coach was like, hey, this guy I know is a broker, when you meet with him, and I didn't even know what a broker meant, a broker of what, so I showed up at the interview, and he, was selling and leasing just neighborhood crappy, class B and C strip malls. And so I didn't know really how he did that, but, I could tell he was doing well, had a nice watch, right? And so I started.
The telltale sign of someone doing
it. He was a huge gold watch. No, he was good at what he did for sure.
And he was at a
really small, kind of like mom and pop brokerage shop, maybe 8 people or something. And so, I knew nothing, but he would let me be in the room with him and be in the car with him in meetings. So I started learning what he tells people, like how he gets deals to the finish line, what lenders are doing deals, how to get a listing, how to sell.
Yeah, that's great.
Yeah. And so he wasn't really someone that was trained or good at teaching, but I didn't need that. I wanted to just be in the room, which I think is the ultimate hack in business. Just having someone mentor you by letting you just be there.
You just absorb it.
100%. Yeah. I mean, I don't think I said 2 words the first 8 months. I literally was like, what the hell is going on here? But I was learning who the players were, what they looked for, et cetera, in the Bay Area. And then he also had about 70 strip centers where he was handling the leasing. So I would take those calls, and then naively, if that nail salon for 1,000 feet wasn't the fit for us, I'd go represent them to go find space, but for $1,000 commission, whatever it was. But then I learned how to make deals with mom and pop tenants, and then how do I lease space that's hard to lease, that's off the street, whatever. And so it was about 4 years of brokerage, mostly leasing. I did a couple sales because, like when you lease a space for an owner, they love you, and if they're going to sell, they'll use you, a lot of the time. Mm-hmm. And so like I'd bring him in on that pitch, and so we sold a few deals, and and then my lucky break also was in 2002, I moved to San Francisco, right? And just from being single and out and about, I didn't realize I was making friends that were building Web 2.0. Mm-hmm. So that became my LP base later.
Got it. Well, what happened, right? I think it's very common for brokers to want to get on the principal side. Yeah. Sometimes you have principals who want to get on the brokerage side. It all depends on grass is always greener, I suppose. But I think eventually everyone wants to get, on the more equity side of things a little bit.
Brokers
so what was it for you?
Like a lot of brokers make millions of dollars a year.
Oh yeah. Again, like I said, grass is always greener.
A lot of them create a ton of value.
Sometimes I will do a deal, and make, let's say my promotes $400,000. I'm like, that broker just made $250,000.
Totally. Yeah.
Right. With, and I worked 4 years on the deal, raised the money, did that. So brokerage is, it can be argued that if you're good at that in that world, some make $5 million a year, and not like a few. Like,
what was it for you? That made you want to make that pivot?
Yeah. So in 2006, I came across a strip center in Fremont, California that was on the market for $1.4 million, and it had a vacancy in the back. And the back space had no visibility at all. You can't see it. It was like 600 feet or something. And I knew that if I built a monument sign for $5 or $10,000, I would create visibility and lease that back space. Mm-hmm. So I got really excited. I was like, oh my God, it's easy. It was obvious to me, after 4 years of leasing every day. And so I think I basically saved $100,000 up to then. After 4 years, I was like, I basically put all of it in there, called everyone I knew, raised $50,000 here, $80,000 here from colleagues, friends, and raised $400,000. One of the investors didn't want to invest, but was willing to give us like $1 million loan at 7% interest. It was a no-brainer.
Yeah.
So we bought it for $1.4 million, put the monument sign up, leased it, sold it a year and a day later for $1.8 million. So everyone doubled their money, give or take, right? And for me, all I wanted to do was get the commission. I didn't even know that was a business model. So like, the LPs are like, are you able to do this again? Will you? And I'm like, I think I can do it again. And so, I did one more of those deals just like that. It was the Bank of the West in downtown Hayward, California. Similar situation. I think we renewed the lease, whatever it was. And then, 2008 happened and everything kind of stopped. I had my own brokerage then and kind of laid everyone out. It was like, the phones weren't ringing. It was like, how many years of this? And so in 2010, I decided to stop doing brokerage completely. And that's when deal flow increased because, brokers are not excited to necessarily send good deals to competing brokers, believe it or not, which I totally get that. As a former broker, it's kind of an odd thing. And so 2010 was kind of when I said, you know what, like I'm going to just start putting the word out there that we're buyers full time.
Mm-hmm. Got it.
Yeah. So that's definitely a natural progression. I feel like we hear that a lot. And, it makes sense. Like, and you feel yourself, especially being a leasing agent, you create the value. I can't.
Correct.
I've been on the principal side for a while. I've been as a cog in the wheel for a lot of principals also. And I can't tell you how many times I've seen an agent come in and just program a building for us. And I'm like,
well,
that should be the guy. We should be working with this guy.
On the brokerage side, you see what is a good deal. You see what is a bad deal. You see what's a good owner. You see what's a bad owner. You see all the parties involved. So you can really put it together, I think, once you go all in.
So you officially become a principal in 2010 and you had been a broker through a very good time in America, immediately experienced one of the worst times in America, and then you're like, I'm going to go be a principal.
Yeah.
Did your investment perspective shift? Like, what did you start thinking as you became a principal?
Yeah, I mean, I saw the damage that debt did to people, right? There was a guy I think it was like 2012, who sold us a deal. Actually, we buy from auction.com. The lender was selling the note. They're going to foreclose on him, right? And so we bought the note, and I remember meeting with him. He's a nice guy, and he just wanted to make sure that we wouldn't go after him personally. And I said, we totally won't. Like, don't we're not going to go there. I'll sign something today guaranteeing you that I won't. So we did a walkthrough of the building, and he's been, in the business 30 years, really smart guy. Just debt got him. He lost some tenants, and the rents had changed, and he personally guaranteed that note. And so I think that I became afraid of debt in many ways. So, it's very much like fire. It'll burn your house down or it'll warm it. Mm-hmm. And I think, over the last X amount of years until recently, obviously, everyone thought that it only warms your house. It can't burn it down. And it's like, I think that watching that in a time when I wasn't even in the market in 2008, thank goodness. Right. Yeah. So we exited as like that was all starting. We got out of our second deal. I think that buyer got a haircut, which was still in about a good IRR, and so we were paused. We paused. It was just like lucky timing that I wasn't, and so ever since then I would buy cash for many years and not even finance, right? And so when we launched our fund a couple of years ago, obviously LPs want some form of debt, so it's in my documents. Like I won't take more than 55% LTV, right? And if LPs want to push that more, I'm just not the guy. And so, I think that was my biggest takeaway from that period. And then, even now, we just bought our 45th deal the other day in Temecula, California. Like our formula is the same as it was for that first deal we did in Fremont. It was identify something on day one before we buy it that we can fix and we can actually add value. I think everyone talks about value add these days. I think that what it means has been lost on people.
Oh yeah, you just say a property's value add.
Yeah, it's value add.
Gotten out of control.
If you take out 65% debt, you can juice the returns. It's value add. Yeah, the rents always go up.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Graysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at graysteel.com.
No, so our asset management meetings are long. We are moving tenants around. We are dividing spaces, building a patio. Changing the experience at that shopping center for the community, the employees, tenants, and so our before after photos are something that I'm very proud of. And so, but we identify something inefficient on day one. And only buy if we can address it and get paid for it. Like some deals are out there and they have vacancy, et cetera, but it's priced in the way that if you do the work and get it right, you end up at your purchase price. So you don't, might as well just do nothing and make more money. And so, it's got to be the right deal. And, it's hard to find deals where that seller is reasonable and there is a way to actually add value. And so
do you find it, generally speaking, harder to find deals these days because maybe there's more competition because it's easier?
Yeah. It's funny because, every 5 years, like, it was easier 5 years ago. Right. And so,
it just seems like through technology, you can find more deals, right? I mean, back in the day, you had to actually call people. Now you can go on all these different third-party marketing platforms. You can use
and there's so much capital out there now more than there was. And I think that Google Earth changed things a bit because now you're competing with folks in other states, et cetera. And so you definitely, I think that the approach to real estate of like buying in your market, knowing the one market is kind of outdated. You can't deploy capital or scale in any way if you're in only one market. Yeah. Right. And so as long as you know your niche really, really well, I think that it works, anywhere.
Yeah. And you said something also that rings so true. It's like data has become so abundant. It's become so efficient. Things are priced the way that it will be as it's stabilized. Correct. So you're right. It's like now that we're in this wave of brokers know the market so inherently. You have people so focused and they have the numbers to a T. How do you convince somebody, this is, I still have to take the risk and do this work. This is a forecast.
We don't convince them. I mean, we look at many deals every year. Last year we looked at, I don't know how many deals, and I think we did 6 or 7, right? And so For us, it has to be a seller who wants to transact at a market price. If they don't, then that's okay for someone else who wants to take a bunch of risk for no upside. I mean, that's fine. But, that's why it's hard to find deal flow. Back to the point, earlier, only so many deals a year in America trade that have these attributes. So you really make sure that you have to make sure that your brand's out there and folks know of you, because, that pie for deals that are strip malls that have value add, a seller actually wants to sell, transact isn't that huge.
What percentage of the deals that you're doing would you say are brought to you off market versus being more widely marketed?
I think all of them go through a broker, which in a way I think is kind of on the market.
Yeah, it is. We laugh about this sometimes when a broker says it, I got a deal off market. Well, and I can say this, personally speaking, in Texas where I do deals, when you say you got a deal off market, is it off market?
I mean, does somebody price it for you? Yeah.
Right. I mean,
I was a naive broker, starting out. I always heard off market, and I was like, but aren't we involved? Like, aren't we selling
get emails
this?
every week that's like off market deal like on an email blast.
Mass email blast. I see that too sometimes. It's funny. Yeah.
Dear sir, madam, this is an off market.
Buyers want to feel like they're getting a good deal, right?
Most deals that are like off market, actually, you're overpaying.
Well, it's interesting. I think on a down market, off market, you're overpaying, and an up market, maybe not so much. That's my theory, because I think
there's something to that. Yeah. I would say on that, I think for years we would buy like one deal a year or whatever every 2 years from owners directly, and I think that was like, as the market was rising, they would have broker BOVs at their house, right? Everyone has like 6 of them probably, like if you're doing it right as a seller, and we would beat the price, because they were quoted a 8 cap and now cap rates were 7, right? And they're like, hey, will you sell to me, at a 7.5 with no commission, whatever. And so now that it's changed, those BOVs now are at a 4 and a 5 cap, sitting, on that desk. And so we actually no longer even pursue deals direct the last couple of years. It just doesn't scale, doesn't really work.
Plus, there's something to, like, if you have a trusted partner in a broker, it makes life so much easier.
Yeah.
Well, it's interesting. And again, I'll just speak from personal experience. When you are a broker and you're trying to get listings in business and you're trying to send business to potential buyers and clients of yours, when you find out that same buyer is also circumventing you and going straight to sellers, it burns that trust, and you're now competing with your own clients.
Yeah, people don't get that.
And I tried explaining that to some folks. Yeah, they don't get it.
Yeah, so we keep our narrative, with the brokers simple. It's like, like, number one, there's no selling. I know the asset. Don't worry about it. Don't spend your time telling me why I should buy it. Go work on finding that next deal.
Yeah.
No hand holding whatsoever with us, right? I don't need, just send me the rent roll, the address, whatever leases you have, and like we're good until closing. Number 2 is we really are, all cash. Everyone says that. I mean, we will close cash and then finance later. And 3, we don't look for any of the commission. There's no broker on our side, right? Which is helpful. And then, in every case we can, we'll let that broker resell the property for us, because we don't hold forever, which we can discuss. But so for a broker, it's a low hanging fruit. And plus that surety of close for them, saying to a seller, hey, I know that you want 11 million. Don's at, 10 million, 250. He's going to close. He's not going to, retrade you. We don't retrade unless it's some crazy thing that comes up where it's like, oh my goodness, like I'll just eat the fact that the roof is whatever and what have you, because that will bring me more deals, and brokers talk as they should. And so, like these, now large institutions know that, we will not retrade. And so we've done 2 deals now with like one I mentioned, one I have an NDA that I can't mention, but it's been written about. And so, making it really easy for sellers or brokers. Like, am I going to pay top dollar crazy, beat everyone? Probably not, but it'll be within market range. Yeah. Sure. I'm going to close, within 21 days if I have to.
And it's all out of a fund, or are you doing individual syndications still, or
fund? Okay. Yeah. So the fund is closed ended. I think we're 85% deployed now. We're really happy with it. I think it's 12 properties we bought in the last 3 years.
Is this the first fund?
First fund after 29 exits before that, syndication, deal by deal. And so again, we just bought our 45th deal, I think 2 weeks ago.
Okay.
The news is important, But if you're a busy real estate professional like me, you don't have time to skim through dozens of dry and ad-filled media outlets each day. That's why I read the CRE Daily. It's a free email newsletter that cuts through the clutter and delivers concise, witty commentary on the latest trends and transactions in commercial real estate. If you're a commercial real estate professional, you owe it to yourself to try it out and stay on top of what's happening in the industry. It's only 5 minutes a day. Visit credaily.com to sign up for free.
Interesting. Well, let's take a step back and talk about other things that people, know you about more. And let's I'm curious about social media a little bit more, because I think this is something that a lot of our listeners are curious about. How do you balance, Don, the having substance on your social media and having it be entertaining to read? And how do you balance the not making it be too cheesy while also having your name get out there?
Yeah. So number one, the most important thing is I'm a GP, I'm a fiduciary. I take that very, very seriously, right? And so the social media has to be a big net positive for our LPs. So everything that I say is going to be in that light, right? So every post is meant to either be helpful, for it to be, funny, educational, add value. If it doesn't, I missed the mark. I didn't mean to do that. It's supposed to be positive.
So before you post anything, you really do kind of give us some thought on, is this going to add real value?
Yeah, I mean, it's gotten harder because, I would candidly say, like, in the beginning when I was, anonymous, I could say this and that. And now it's like, well, will that one person be offended? I mean, I was really anti, I'm not a big fan of courses, right, for a lot of different reasons. But and it's like early on, I would just like very, kind of like openly bash courses. Well, I have friends that I've made now, and they're good people, and they have courses. And it's like, I think about the fact that they.
When you say courses, you mean teaching people how to invest,
like how to make money in real estate.
Sure.
So that whole world is, we probably won't get into that.
No, I
today,
think we should actually, because I
that
think
goes
this,
with my open book mentality.
I think it's hilarious, and we should talk about it for just a minute or two.
Happy to, yeah. I mean,
when I ask, how do you balance between being cheesy and having real substance? My LinkedIn is inundated with just cheesiness.
Don's about to lose 3 investors.
I'll lose people. I mean, but I mean, it's funny, right? It's how to grow wealth passively. Yeah. It's a thought leader, right? Thought leaders.
That's the reason I started the whole account, because a lot of folks out there have no experience, and look, for the most part, there are exceptions. Real estate god on X, you're a good dude and you're smart, and I'm sure that the folks that buy your course are learning a lot. That's for instance, Sean Sweeney is a great dude as well. And so, but there are a lot of people out there that and in my kind of the way that I look at it is if you're making so much money in your business,
why are you teaching?
Why would it make sense for you to go spend time? Coaching people, doing a course. Like
I asked
Warren
the same
Buffett
question.
Is not doing a course.
I asked the same question. I have clients who do teach other folks and have these courses, and I respect them. And again, no shade, but I do ask that question sometimes. Like, why are you teaching others how to invest if you truly are so?
A lot of smart, good people believe that the course thing is good. And obviously, I think that you will learn something, but it's like, it's not going to make anyone able to then invest and go buy real estate.
Yeah.
Right. So
I think it speeds the process up a little bit, right?
Like
there's a learning curve.
Go read a book, same thing. But, I think that there's a thing where, I'll go to a seminar for the weekend, feel good, and then I can buy a strip mall on Tuesday, and it just doesn't work that way. Like you have, like, if you want to buy real estate, you need a mentor that will teach you every day for like 5 years, and you have to be good at it. Like not everyone is good at buying real. I mean, it's just, you have to have a knack for it. Like sometimes, it's learned, but it also is not always learned. And so,
but surrounding yourself with the right people who you can learn from is very important.
Which will happen to me. Like I was 24 years old. I met this guy 3 years older than me. He was 27 and already bought 15 strip malls, and like he's just like what
these stories, right?
Like I would spend hours. I was like 25 years old, whatever, talking to him on the phone at nights, weekends, over to his house. Like he's just a freaking savant of.
Now, what was in it for him to talk with you?
He just loved the business.
Got it.
And I would sell him every freaking deal I came across.
There you go. Yeah.
Right. And so he would close. He would not see a property for what it was today. He would see for what it would be in 3 years. And like, I'd be like, Danny, why are you buying a 4 cap? He goes, Don, it's a 9 cap. I'm like, it's a 4 cap. He goes, no. Look at their rents. They're $1.50. It's a $3 market. These are up in 3 years.
Yeah.
That's the cap rate you look at, not today's cap rate.
That's you buying the deal at the market price. Yeah.
That is price per foot. And so, he would just, until now, we text every single day. He sold me deals over the years that he's wanted to get out of and whatever, and we ended up doing well on. And so, but he loves the strip mall world, and so do I. And so he and I just like geek out on it. So it's like, that's how you learn to be good at it.
Yeah.
It's like through someone else who's been doing it. Otherwise, it's like expensive, weird process. And like, how do you compete with someone who's in the business for 10 years if you took a course and you want to jump in on
Well, I think these courses can be helpful too, to the extent that it helps you network with other like-minded people. And that's a good way.
Sometimes like blind leading the blind. Like you're
that's exactly right. And you can network so much more efficiently. Like, go find a hobby. Go play basketball.
Spend all that time and money going crazy finding a mentor, and someone's like, listen, like, I just want to be in the room, pay me minimum wage for 2 years. I don't care. That's how you do it. Like, like there's no weekend seminar.
It's something we talk a lot about is like advice for people breaking into the industry, building these careers. What I like about you is I could see the things that like kind of irk you when we were talking about. So for me, it's guys going with like, you meet a lot of these smart kids, whether they're studying business or finance, whatever it is in college. I want to be in acquisitions. I'm going to be in acquisitions role. And I tell a lot of these guys, like, that's cool. Like, what does that mean to you? What do you think you're going to do with that skill set? And I feel like so many of them leave off learning how to actually operate a property. You're talking about you want to be an acquisitions guy because you want to own real estate. You're going to buy real estate for somebody else, but what are you going to do when you're your own operator?
Yeah.
So like, what advice can you give, or what advice would you give to yourself when you were 24? What advice would you give to somebody now? The mentor, wholeheartedly agree with you. I don't think there's anything more valuable than somebody shepherding you through a process. But what else can you tell someone?
Yeah. I would say focusing on one thing, on one niche, as narrow as you can go, and learning it really, really well. I believe that knowledge compounds over time. So like, I think a lot of folks that I know that, are really smart, hardworking, they're so smart that every 3 years they jump around because, I can do this, I can do that. So it's like focus on one thing really well. And back to your point about acquisitions, how the heck do you buy a strip mall or underwrite it if you haven't done the leasing to understand what the rent is going to be? How do you know, right, how long it will take you to lease that elbow space? And is it really $1.80 or is it worth zero because like there's not enough parking in that center?
Yeah.
And if you lease that 5,000 square foot elbow, you kill every other tenant. And so I think, jumping to, acquisition, whatever it is, you really have to start at the bottom. It's like that restaurant worker that starts doing dishes, whatever. It's like knowing the aspect of the business that are really niche is a must. It really, really is. And like, people think that they're above that. A lot of folks that are really smart, like, I'm not going to do leasing of 1,000 square feet. I'm going to go buy the building. It's like, well, how much risk are you taking if you don't know how to underwrite a deal? It's like, going on Crexy, love Crexy, and just finding the comps and plugging them into your model doesn't work, right? And so I think that's why all these folks jumping into the strip malls, what they're going to find or finding is that like underwriting is really hard. It's not like in industrial or in apartments where, you kind of easily kind of know what the rent should be. It's every space is underwritten differently. Are there handicap parking spots in front of the space? Are those trees blocking the signage, meaning that, that $3 rent everyone's getting, you're not going to get because that visibility is not what they have. There's all these things like parking ratios are huge, right? And so all these little things that people don't know, they don't know, is why I think folks have a hard time getting into this space.
Yeah, I think that's very sound advice. I hope people see that, especially as a young. I know, but especially as a young guy, it's like, and if you are smart, there's so many people smarter than me, and I always remember this coming up. Started in banking, debt and equity. Like, drop your ego. Yeah. Drop your ego. Why are you above leasing 1,000 square foot space?
Yeah.
I don't get that.
I get asked, Don, you're doing $6 million deals, on average. How do you make money? Why don't you graduate to grocery anchored or big box? And it's like, okay, well, I'll graduate to starting over because I'm not the big box grocery anchored expert, right? So that's 20 years, let's call it 15 years back. Somebody else is, right? And for me, I'd rather double down, get better at this, and be, the best at this niche.
Yeah.
So that's the moat.
Like that.
Yeah.
That's the moat.
The trigger word for me these days, AI.
Yeah.
Are you using AI? Does that mean anything to you?
Yeah. Look, I mean, I feel just because of the audience, I feel some kind of responsibility to understand who's doing what, what's out there. And so I'm taking lots of calls and doing meetings and finding a few things. One is there's a huge difference between a great demo and a product that you can use tomorrow that will work. Two, I think many of these startups are doing the exact same thing. Like lease abstraction is being done by 190,000 people right now. Yeah. And so, I think there's definitely, it's coming for sure. I mean, last week we used Chat GPT for like a graphic design thing on a strip mall.
We're doing that now too.
Yeah.
It's no brainer.
It's great. And I think also, lots of mistakes are made by very simple requests on there. And so I think that there's some kinks in the process, but it's definitely happening. And, I'm seeing things out there that folks are working on that, like one of them, there's groups working on when a broker sends you an OM, this AI will just immediately give you a score of 1 to 100 if it'll fit your buy box. So like anything under a 60, I won't look at, and then it'll format an email of why it's not a good fit. And so, that's a lot of the analysts do that.
Yeah.
All day. So I will say a lot of these AI companies say that they're working with, I'm going to work with lawyers with this. It's not with, it's instead of, obviously. And so, I do think that is coming. It's already here. And, anyone that says that it's not, I think should re-examine their beliefs.
Yeah. Okay. Well, we're kind of coming up on time, so let's spend the rest of the time just talking about real quick this gala.
Wait,
and get more into it.
I won one of these.
That's a big deal.
I think you won one of those also. One of these golden tickets.
I didn't know that. Oh my God. Yeah. Agora must have hooked you guys up.
So that's
Agora.
Give me the chocolate factory.
There you go.
Can we put this boom right there?
So tell me about this. What are we doing?
Yeah, so cool event, May 1st, Hudson Yards at Peak, right, 100 floors above New York City. And it really is a celebration of people doing really cool things in real estate across America and using social media to do it. So last year, Jeff Blau came out. We have a bunch of folks flying in. I think half the room flies in from other places. So it's really a celebration of all the time that we spend online that's helping us do things. And a lot of folks in that room are basically connecting with the people on social media every day more than they do like their family in a lot of ways. And so that moment where they meet in person is really magical.
So there's a lot of people who are always talking to each other.
There's hugging. Social, but people are excited. They're
hugging?
You'll see.
You're a lot shorter than I thought you were. You're a lot you're. Hey,
people get really fired up.
That a lot?
It's
all
fun.
the time.
We do red carpet, media, all that stuff.
Yeah.
So.
Is it does it go on? Throughout the week? Are there more events that kind of happen, or people get together informally afterwards?
That, a lot of folks are setting things up. Around that week.
Are deals getting done at this event too?
Definitely. Yeah, I've heard of a bunch of folks are like, hey, I met that person there and now we're doing this or what have you. So definitely things, that happens just by virtue. But, it's a room where everyone you meet, it'll be like, that's a really cool person. That they're either newer to the business but full of energy and going places, or someone like Emmett Smith coming out, or folks that run funds, and just it's kind of like it's no name tag, so talk to everyone. You never know who you're talking to in that room.
Imagine you have to wear the tux with the name tag.
Yeah, that'd be awkward.
So black tie, red carpet, a place where everyone's going to be. Yep. It's at Hudson Yards, which is super cool.
Jack and I will be there this year.
We will be there this year.
Doing a couple of
interviews. Get your golden tickets.
And we got our golden tickets. So
Agora hooked us up with a golden ticket.
Yes, thank you to Agora.
No, we're super excited.
You guys will love it.
Yeah. It'll be a lot of fun. Cool.
Good.
I guess Don, you're a lot of fun to have on. Thanks for coming on. You're not just a strip mall guy. You're the strip mall guy. You're a strip mall Mitch.
You're a strip mall Mitch.
I appreciate it. Thank you.
Yeah. We'll go with seriously, thank you, and looking forward to the event. We'll have a drink. We'll have some fun.
Okay. Yep. It'll be great.
Good time.
Thank you guys so much.
Thanks.
Yeah, that's great. Wonderful.